Hello, just running out a short video here on Wednesday the 7th of October. We're just over an hour into the trading day. Just want to review the major charts and levels at this time. Just quickly, this is a pre-open today, but I've got to extract top left here from Thursday the 1st of October. Pre-open when we were down here somewhere. Just quickly reviewing that on the Wednesday in here. Enough time spent overnight at 1923 to migrate the 55-day point of control to that level. This is significant. Here's the 1923 level, I've just drawn it in here. I said the PRC emerging at 1923 makes sense, suggests the distribution that began with the August sell-off may be near completion and the E-mini may be ready to begin a new distribution, and price relative to this level is now very important to monitor. And I said that significant buying marked above that point of control would be a positive and suggest higher. Actually, we had aggressive buying here marked the following day above that level. This a little more convincing, entire value area above that level. So I said that would be a positive and suggest higher. The alternative, of course, was selling marked below that level would indicate more weakness. But certainly at the moment, if we're beginning a new distribution, we're looking for a directional move with significant buying or selling marked, and it appears at the moment, if we look at the live chart of the December futures, this is 1923 here, and we are making some progress higher. In fact, we are now printing quite convincingly above the halfway point, which we always watch from this year's high. So we know that 1971 is the halfway point in the short term, as long as the price stays above 1971. Now it's in a strong price location in the longer term. As long as this point of control remains at 1923, we can say that price, as long as price is above there in the longer term, we're in a strong price location. So there's been some improvement here, definitely, and we may have begun a new distribution. This is the spider, just going to show two or three major index, actually large cap indices. Now, on the August sell-off, we had that really big down Monday here, and this time spent below this point of control at 187.20 was brief. The following day, we actually made low at that point, and then we came back over here and made low right on it here. So apart from this brief test below that level on one day, we have what kind of looks like a double bottom here, possibly on this important level. And just from experience, that can be quite bullish. So again, now in the short term, as long as we hold above that halfway point off the high over here to the low, in the short term, strong price location here for the spider. This is the UK FTSE 100 large cap index. Similar picture here, above 58.70, which is a major level. This index has yet to print above its halfway point, around 64.50. FTSE is closed up for 6 days. It could be some consolidation, but this may well be some resistance here on this chart. And on the German DAX, 93.07 is the major, and this was never actually tested. It came very close, so we have support twice here. Okay, I'm keeping the video really brief, but just a couple of charts. This is the United States Oil Fund ETF that we've been following, and we've been following this level, this halfway point off the low. And the first sign of strength off a low is to mark the halfway point to the first rally high, from the low to the first rally high. Just worthy of note that oil seems to have found support here. And this is crude futures as well. I think the main point is there's lots of charts where we have yet to clear the sort of resistance that the large cap indices appear to be doing, but certainly these two levels here on the spider chart, 187.20 down here for the big picture level, and in the shorter term, this one here around 198 halfway point. We've got gaps and all sorts of things, and we're getting slightly overbought. Maybe there'll be some consolidation, but if we can hold here, we have some levels to work with. Remembering, of course, that we've come from a situation where the sentiment indicators were registering extreme bearish readings. From a contrarian point of view, we've pointed out in the webcast and the ebook that they're getting very much overdone. And well, as an example, if you look in the in the pre-open recently. We're looking at the my version of the Ridex assets ratio, and the ratio at 3.09. That was a 2-year low just this week. So a lot of this rally may be short covering, but we'll be watching these levels I've just described closely over the next few days.